Hey everyone, it's Chris from Smithy Fitness and Smithy Finance. My Smithy Fitness guys, this will be one of the last finance videos you see on the channel. I might do one more, but I have started a new channel called Smithy Finance, which is dedicated to my stock market and financing life, which is significant. And the title of this video is The Secrets of the Stock Market. Veteran Pro reveals all. So I started on January 24th, 1984. That is more than 41 years ago. I have been full-time in the stock market. That equals at least 85,000 hours and probably 100,000 hours. I mean, there were years when I did nothing but focus on the stock market. Now I'm not quite so intense, but I don't miss many trading minutes when the stock market is open. I'm usually got an eye on it. And I've learned a few things, and I want to go over some of those things I've learned that might be able to help you amass a fortune in the market over time. That's the main thing, is over time. You got to stay consistent in this game. But there's lots of great things about the stock market and lots of things to watch out for. So I'm going to go through some of them. I like to say I've made millions in the market. I've also lost millions, but I have kept millions. So my millions made are greater than the millions lost. But you learn a lot from the losses, and it is part of the game. We call it tuition. It's what you pay to learn, and it's unavoidable. You're going to have losses, and probably lots of them, and probably some that really hurt. But don't let that dissuade you, because those are your greatest lessons, and that is how you will catapult yourself to the next level. So the stock market is a game of psychology. It is about earnings and interest rates and new inventions and all that sort of thing. But psychology, human psychology, has never changed. Fear, greed, those are the two emotions that rule the market. And to be successful, you have to kind of game those emotions. And we'll get into that a little bit more. But it is a game of psychology. So here's a bunch of points that I've made. There's probably going to be 25 or something. I'm up to number 8. I feel this is going to be part 1 of 4 or more videos. We shall see. I learned about the stock market. Listen, I started in 84. I probably bought my first stock in 82. I knew nobody growing up who invested in the stock market. I knew nothing about the stock market. I didn't even know it existed, and certainly didn't have any knowledge whatsoever or anybody who could help teach me or push me into the market. Zero. But I did have a teacher. And in grade 12, I had Mr. Morris, grade 12 and grade 13. In Canada, we had grade 13 in those days. I had him as my economics prof, or teacher, I should say, in grade 12 and 13. And he always had the stock tables open on his desk and would read them while the class was coming in and class was leaving. And he started to teach us a little bit about the stock market, even though it wasn't on the curriculum. And in those days, interest rates were going way up and the price of bonds was going way down, which is what happens when interest rates go up. And he said, you can capitalize on the bond market. And we're like, well, how can you? Because bonds are going down because interest rates are going up. And he said, well, you can short the bonds, and you can short them with leverage, which is like just mind blowing. That might not mean anything to you, but the financial engineering of the stock market is vast and profound. So anyway, Mr. Morris, he would have no idea about me. I was just one of many faces, but it fascinated me, and I've been fascinated ever since. And at that point, I knew that I was destined for a life in the stock market, which I have done, and I expect it'll never end, because it's entirely exciting and without disappointment, the market, as far as the ups and downs and the surprises. It never ends. You never get bored of it. Anyway, here's a few points I want to talk about. And number 1 is you will be disappointed often. Now, as I said, it's a game of psychology. Companies will come out and make promises and expectations of the next profit, of the next quarter's profit, or the next year's profit, or the next invention that they're going to make. and they will disappoint often. And the stock will, reflect excitement on the promise and devastation on the disappointment. This is going to happen. So be aware of that. Um, Number two, there are scams everywhere. Now, look, I don't want to scare you from the market, but there is big, big, big money in the stock market, and it brings in a criminal element. You might have had a cold call at home, and some slick speaking salesman on the other end of the phone telling you about the next great thing, and you should come in and buy a taste because it's going to really rock it. And there's a whole scam there. I can talk about that for an hour. But anyway, there are scams, and just be aware of it. These altcoins that are out right now, um, you know, fart coin and Portnoy coin, and there's so many coins. They're coming every day. There's even a Trump coin out there. Look, these things are highly, highly, highly risky and uh, not trustworthy. So anyway, just be aware that there are scams everywhere. Um, Technical analysis is only okay. So look, there's times when certain things work in the market and times when they don't work. And it used to be that technical analysis, which is just really the examination of the chart. What does the pattern look like on the chart? And there's certain patterns that indicate that the next month or so will be up or will be down or will be sideways. And there are times when this works. But at this point in history, right now, almost everybody is aware of technical analysis. And because of that, the value of the game has worn slim. There still is some value, but don't over depend on the chart patterns. The fundamentals are far more important. And the chart patterns, which might look ideal, the pros, the people who trade stocks professionally and work for the JP Morgan and all the big corporations or financial companies, they are savage. They understand the charts better than you do, and they can manipulate the charts to get you excited to buy it, and then they'll plunge it so you get manipulated to sell it, and they make that spread. So be really careful on technical analysis. It's only okay. Fundamentals will always rule the day, maybe not short term, but certainly long term. When I say fundamentals, I mean the earnings of a company, the sales of the company, the growth of a company. Here we go. So buy strong stocks on pullbacks. This is one of the two best pieces of information I can give you. Stocks that are just ripping, don't buy them then because they get too excited. There's too much froth. Wait a little while. They will have a pullback and maybe a sharp pullback. And that is the time to start buying them. Okay, so we don't buy them on the rip. We buy them when the rip ends and there's a bit of a drop, and then you can come in and get some. And I'm going to give you some real life, real time examples, especially on my Smithy Finance channel. I'm doing a market update most days, not every day, where I'll be talking about the stocks that I'm buying, the stocks that I'm selling, what I'm seeing in the market, what's making the market move up or down on that day. So I will have lots of real time and real life examples. That midday market report, I call it, usually will come out about 1:30 p.m., maybe 2 p.m. in there somewhere. So here's the next bit of really solid information, is to always scale in and out. In other words, if you like stock, let's say you like Nvidia, you buy a little bit now, and if it drops, you buy a little bit more, a little bit more, a little bit more. If it starts to go up, at least you've got a little bit. If it goes up and it pauses and goes sideways for a bit, okay, add to it. But basically, we want to be ready for the drop. So buy a little bit. If it checks back, you can buy a little bit more. If it goes higher, at least you've got a taste. And it goes way higher, you might just take a small profit, or you might wait till that pullback, because that's, again, another strong place to add. So you've got some here, it goes to here, there's a little pullback, add, and away it goes. This is the way to play the game, and it's the best time ever for this game because the commissions are so low. You know, when I started in the game, it was like 2% commission to buy a stock. So you know, if you bought 1,000 shares of a $20 stock, that's 20,000. You pay 400 in commission. Well, now you pay $4.99, maybe $9.99, maybe zero. Some places are zero commission. So it's really easy to split up that order into many different pieces because the commission is so low, it's not gonna hurt you. So we scale in and scale out. The stock goes higher. You know, maybe it goes higher quickly. Maybe you're going to sell a little bit, sell a little bit, sell a little bit, all the way up. That we'll talk more about that. I'll do a video dedicated to that. Number 6, for God's sake, stay humble. Okay, as soon as your ego gets involved, as soon as you think you know the market, it is going to punish you hard. Okay, so we got to stay humble. I would recommend that you stay quiet. Don't be tweeting out or posting, you know, or bragging about how smart you are that you bought XYZ. You get too attached to it, people start to follow. Some of them will want you to fail. I would just keep it on the down low and yeah, stay humble, because the market, if you ever become overconfident, the market is going to punish you into oblivion for real. Okay, so for God's sake, stay humble. You know not much. Okay, even if you read the annual report and all the quarterly reports, and you go onto the bull boards where they talk about the stock, you really don't know that much. You know some things, which is great, but the insiders know more. Those closest to the company know more. The suppliers of their raw materials, they know more. The people that work at that plant, they know more. That company, they know more. Their competitors, they know more. So we have to know that we know not that much. And that keeps you from overconfidence and putting too much into any one story, any one stock. We need to spread it out a little bit, not dramatically, and I'll talk about that in a separate video as well. But it's just good to know that you don't know that much, and that can keep you with a position size that's manageable, as opposed to being too great a piece of your pie. Again, I'll do a full video on that someday. Look, everything matters in the stock market. Everything matters. The politics matters, interest rates matter, it matters what the Fed is doing. It matters very much what the oil price is. It matters what's going on in China. It matters what's going on in India, South Africa. It matters of the wars that are happening, sanctions and tariffs. You know, we've had copper going up lately, for example. And I was kind of wondering, well, why is copper having such a bullish move? Well, partly it's the tariffs, because it's going to cost more to get them to the consumer in the US because of tariffs added. I don't know. Is that what's going on? Probably. So, but the thing of it is, it all matters. And then that's just the macro. Then you get down to the micro, which is the company itself, the company fundamentals. Maybe there's some breakthroughs, some AI. Here I've talked about BTC. What's happened with BTC, which is Bitcoin, is it's taken a little bit of the luster away from gold and silver. So it used to be that gold and silver was the best way to, I don't know, play against fiat currencies, which all inflate and eventually collapse to zero. So gold and silver have been the place to be. But of course, in the last decade or so, Bitcoin has had a big influence on that. The market cap of Bitcoin is about 2 trillion now. The market cap of gold is, I don't know, 20 trillion, 19 trillion. It's been going up. Gold's been doing great. But the gold stocks haven't done that well. And part of that is because guys like me, who used to put a whack of cash into those situations, has been diverting some of it into Bitcoin or MicroStrategy or the Bitcoin miners or whatever. There's this whole new competition. Anyway, these breakthroughs really matter. And you can go back and look at Kodak, for example, who didn't keep up with the change in photography and phones and whatnot for camera work, and they were knocked out of the business. Same with Xerox. So these technological breakthroughs can really affect a company. So we have to think about everything. Natural disasters. I mean, that's crazy, right? Some sort of situation that happens in China can wipe out a manufacturer in China that affects the price of goods in Canada or the US. So everything matters. Terrorists, a plane flying into a building obviously matters a lot. So you have to be kind of up on it, on everything. Last thing for this video is guard your downside. You must survive to trade another day. And I always talk about losing less. That's I think one of my great lessons that I've learned in my trading career is to lose less. And sometimes you lose less by getting out of a bad situation in a hurry when it becomes evident that this is not one I should be scaling into. This is one that I should be getting rid of if something terrible happens or some new competitor comes out. Leverage will help you a lot. So look, if you're buying stocks on margin, in other words, you're putting down $1,000 and buying $2,000 worth of stock or $1,500 worth of stock, you are really leaving yourself exposed. I do believe in margin. I do use it. But you have to be very, very careful, because in a crash situation, in a serious drawdown, you're going to get margin calls. You're going to be forced to sell stocks, and you're going to, your $10,000 is going to turn into two instead of your 10,000 turning into 6,500. 6,500, you can come back, and get to 20,000, but 10,000 down to two, boy, it takes a long time just to get back to 10. If it hasn't destroyed you psychologically. So really careful on leverage. Keep it at a low level. Play the long game. Don't just try to be a genius today and a wizard, a stock wizard. It takes time. And again, the pros are savage. They will sniff this out and they will cause maximum pain. The pros will love to dance on your grave, to turn you bankrupt. So we have to be aware of our opponent in a way. Who is on the other side of the trade can be, somebody with more knowledge than you, with more power than you. And if you are naive in this, you are going to pay your tuition, which we don't want to do, or at least keep it minimal. So I think that's all I have for this one. Remember, my Smithy Fitness guys, I do have this new channel, my Smithy Finance, and I'm going to be uploading probably 5-6 times a week on that. And Smithy Finance, if you've found my finance channel but you don't know, I do have a fitness channel, because look, money and muscle are two of the top ingredients of a good life. Love is in there as a third, but look, you got to have money and have a certain style and attractiveness that being fit will give you. Okay, that's it. This is part one of how many parts, I don't know. Thanks for checking it out, and thanks for tuning in, and I will see you in the next one.